Welcome to the next video. This is about conceptual framework. Apart from the IASs and IFRSs and the ethics, we also follow conceptual frameworks. Okay, this procedure from the conceptual frameworks which requires the following. Identify where there may be a threat of auto fundamental principle, evaluate the threat, how significant is that. For any significant threats, apply safeguards or to eliminate or even to reduce that. If safeguards cannot be applied, decline or discontinue the professional service. Yep. Okay, we're going to talk a little more here. Threats to fundamental ethical principle. Compliance with the principles may be threatened in business and in practice by any number of threats. What are the threats? There are 5 types of threats: self-interest, self-review, advocacy, familiarity, intimidation. Self-interest, when you being an accountant or auditor interested in companies, any stake, may occur where it could be financial stake or other stake will inappropriately influence the member's judgment or behavior. Self-review, when you check your own work, may occur when the previous judgment needs to be re-evaluated by the member responsible for the judgment. So just remember, when you check your own work, being an accountant or auditor. Advocacy, when you represent your client to a third party, may occur when a member promote a position or opinion to the point that subsequent objectivity may be compromised. You are representing your client or advocating your client to a bank could be, but the objectivity being compromised. Familiarity may occur when because of a close or personal relationship or long-standing relationship, not just close relationship. If you have been working for many years for the same client, then you know them very well, so you might be a little bit biased toward them. Intimidation, undue pressure we call it, may occur when the member may be deterring from acting objectively by threats, because of the pressure, whether actual or perceived. That's your intimidation. Well, we have an activity 8, threats to the fundamental principles. Explain the threat that is most relevant to each of the following scenario. 1, 2, 3. I think these are the 3 scenarios. So let's check it out. Number 1, Steve is a member in practice, so tax and audit consultancy could be. He is currently engaged on an assurance engagement, so audit engagement with Porter PLC. Great. On Sunday, he celebrated his successful completion of his 80. Ooh, that's nice. As a gift, his grandmother has transferred her 2% shareholding in. Grandmother also owns shares into the Porter, where Steve is engaged. So if it is so, now Steve gonna own shares in the same company where he is doing the assurance engagement. So he will be self-interest we call it, So he has financial stake in this business, and now, so he will be more interested. It is advisable to send, apart from Steve, someone else to do the audit engagement. Next one is the accountant at JED has been taken ill. Okay, JED's audit firm has been asked to prepare the financial statements and audit the financial statements. It's the same person, the accountant of JED has been taken ill. JED's audit firm has been asked to prepare the financial statements and audit. The same person is preparing the statements and the same person is checking the audit. So it's like checking your own work. Being an auditor, when you check the accounts being prepared by you, we call it self-review. When you check your own works and you're going to say, my works are good. You will never say it's a bad work. So that is prohibited as well. We should use separate team. Number 3, Charles Greenfield has been the engagement partner on the audit of Hamptons for many years. Now that's the matter here, many years. That means familiarity threat. That's the threat. Not more than 6 years is a good rule. but again, sending a separate team always works out. Sometimes denying the financial stakes, sometimes sending other people peer review. These are the safeguards that works out. We're going to check out a few more safeguards. AT Code 2017 defines safeguards as actions or other measures that may eliminate threats or reduce. Yeah. So what types of safeguards? Safeguards created by profession and legislation and regulation are safeguards in work environment. Let's check out safeguards created by the profession itself. For example, AAT has given you some safeguards, which includes education, training, and continuing professional development. So you are learning these things, you already know. So that's what AAT or ACCA, they are teaching you. Come on. Number 2, corporate governance regulations. So CG, corporate governance, that heavily monitors the unethical acts and helps you to reduce the threats. Professional standards, professional regulatory monitoring, disciplinary procedures, external review of financial reports, returns, and other communications. Well, so what are the safeguards in the work environment? This includes quality controls and internal audit procedures, mechanisms to protect the empower staff. Whistleblowing, someone should be inside the organization who gives the information. Consultation with third parties, rotation of staff, we call it, sending different people, use of ethic committees or forums. Yep, we can use different board. Yep. NEDs, we call it, board members. Organizational policies to document threats, use of professional judgment. These items reduce the chance of your threat. Well, we have an activity on the same topic, activity 9. It's a big long activity. Check out our next video on activity number 9. Till then, goodbye.